Alright, let's jump right in. If you're stepping into the world of trading, today we are breaking down a seriously powerful strategy, the hit and run Doji. It's a fantastic, low-risk way to grab those short-term profits. So keep your eyes on the screen and let's get into it. Okay, let's dive into this roadmap. We'll start by looking at what a Doji actually is, then we'll figure out how to spot the market trend, break down the short-term strategy, and walk through safe buy and sell orders. Finally, we'll wrap up with risk management. Don't worry, we're going to break this complex concept down step by step. Section 1. What exactly is a Doji? Let's look at the core building block of this entire strategy. So, a Doji is a specific candlestick that pops up when the open and close prices are virtually identical. This means the body of the candle is incredibly tiny, or sometimes there's no body at all. And because it's so small, it honestly doesn't matter if it's green or red. Now, what's really interesting about this slide is the psychology hiding behind that tiny shape. Think of a Doji like a massive tug of war. On one side, you've got the bullish buyers pulling with all their might to push prices up. On the other side, the bearish sellers are yanking hard to drag the price down. So what happens when neither side can take control of the rope? A total standoff. Nobody wins. It shows pure indecision and a temporary pause in the market. Now, you'll see a few variations out there, like the long leg, the dragonfly, or the gravestone, just so you know they exist. But listen up. For our hit-and-run strategy today, we are strictly looking for the classic plus sign or star Doji. Keep it simple. Section 2. Identifying the trend. Because before we ever even look for a Doji, we need a reliable compass to find out where the market is actually heading. Okay, so the crucial point is 14. Specifically, the 14-period simple moving average, or SMA. We rely on this as our ultimate guide for trend direction. It works like this. If the price is consistently hanging out above that 14-period line, we're in an uptrend. If it's below, it's a downtrend. And remember the golden rule here, folks, never ever trade against the market. We use this strategy to enter strictly in the exact same direction as that established trend. Moving on to Section 3, the short-term strategy. Let's look at the exact mechanics and the mindset you'll need. First up, let's get our expectations right. Like it says right there, this is a hit-and-run operation. You aren't riding out massive trends or trying to catch huge dramatic swings. It absolutely requires patience to wait for the right setup. But once you execute, it's a rapid in and out move meant for quick, small profits. Here is the 4-step blueprint. Deliberately go through these. 1. Identify that trend with the 14 SMA. 2. Spot a Doji that fits entirely inside the previous candle. 3. Wait for a false breakout. And 4. Enter the trade safely. And this brilliantly illustrates why waiting for that false breakout or whipsaw minimizes our risk. We let everyone else make the mistake first. Section 4. The safe buy order. Let's translate this into real-world application. Picture this. The price is riding high above the 14 SMA. Suddenly, a tiny Doji shows up in the lower half of the previous green candle. Now, aggressive traders, they're going to jump the gun and buy right there on this bullish Harami cross. Not us. We play it safe. We wait for the price to drop slightly below the support line. It's a trap, a false breakout that shakes out the impatient folks. The second the price bounces back up, that's when we execute our safe buy order. Section 5. The safe sell order. Time to switch perspectives. Let's move to and see how this builds. Because it perfectly mirrors the buy setup, we're just operating in a downtrend. Price is below the 14 SMA, and a Doji pops up in the upper half of the previous candle. We sit tight and wait for a false breakout above the resistance line. Once that upward push fails and the price drops back down, boom, that's our cue to enter a safe short sell. Section 6. Risk management. And I cannot stress this enough. No financial strategy is complete without strict safety rules to protect your money. Please treat this slide like your ultimate beginner's cheat sheet. Setting the stop loss is literally the single most important part of executing this low-risk trade. If you're buying, put that stop loss right below the current daily low. If the market suddenly turns on you, you're automatically out with just a tiny scratch. For taking profit, set it right above the pattern's high. You get in, you hit your target, and you get out. So the strategy is right here in front of you. But I want to leave you with this. Do you actually have the discipline to wait for that false signal before making your move? The charts are always going to repeat themselves, but discipline and patience, those are your true secrets to trading success. Thanks for joining me for this explainer, and happy trading. In this video, The visuals are used as illustrations to help you better understand the content. If you would like to explore the topic more deeply, feel free to join our community where you can learn new knowledge and exchange ideas with others who share the same passion.